Can you go YouTube? See what they have. Can see the chart as well. Can see the chart. Let me mute first. Okay. We'll start in another 5 minutes or so. Hey guys. Okay, we'll wait for a few more of them and start in 5 minutes. For those who have webcam, please on it. Okay, we have Sam. I think we need one more guy. I think we have one more person. Then we can start already. Oh, Seth is here. Okay, I think more or less can start already. I think is Stephanie here. How do I open my? No. Okay, cool. So maybe we'll address her question later. Okay, you guys got any pairs to begin with? Let's see. Okay, let's go to pound cat then. Pound cat. Okay, so so we have H for chop. Okay, let me just remove all of this. So you are bearish, right? Or bullish? Okay, we have Dunstan. Okay, so we are bearish. So prices broke this level. And then we have this supply here. So I think we have a supply here that is left untapped. So perhaps we can we can expect prices to move higher into this level. Otherwise, if you use this supply, fair enough. So prices did tap this supply and give us an LTF change of character. So 15M, right? Alright, so well, it's pretty huge. We have a sweep here first, and then we have this. We can use this entire move, right? So the framework is pretty huge. So honestly speaking, you're waiting for a pullback onto this supply or the higher one. Okay, so I think this is a very mild reaction. So generally people like to use a huge move like this. So if you were to use the lower time frame at this level, it's probably a huge buy to sell. Okay, you can see this pin bar, we can even refine to this level. So given this huge structure, I think prices will be delivering bullishly on the 15M to tap into this level, because it's not so, this framework is huge. So for traders who are looking to short upon 15M limit order, right, then this could have been your entry, and of course stop loss above this high. But if you are expecting a higher price to be met, for example this supply here, then of course you will wait for another 15M change of factor here. But if you understand that the entire move here is so huge, you want to wait for a H4 change, then 15M change, then enter here. Alright, this is definitely valid. But let's work with what we have currently, right? Because the 15M did chop over here, right? We broke the 15M swing. We have two supply here. You can use this, alright? And then if you want to place a sell limit, you can do that. Otherwise, you want to wait for 15M to be the pro trend, because 15M is going to deliver bullishly here. So by selling at this level, you are selling into the 15M bullish move. So if you are 15M confirmation trader, right, then of course you want to wait for 15M to be in your favor first. So you're going to see this switch. You're going to see this change of character, the sweep of the highs, tapping into supply, and then get involved here. So this is the pro trend. This is where momentum is in your favor, right? Prices just broke. We have this as our framework. Yes, we have this as our framework also. So can you see, if you are to scroll out, this is bearish, okay, and then this is bullish, right? Can you see this is bullish? So now this turn bearish here, right? When we see this break of structure on the 15th, then now it becomes bearish. And then of course you can wait for another alignment over here to happen, then take sells. So this is where you actually use, you can place a stop loss above this high, right? Because this high took out liquidity, broke structure here. That's why you can have your sell limit at this level, highs over here. So for those who are taking one step further into the 1M time frame, then this is what you want to see, right? You want to see another shift and then another 1M change of character here. So this is where you use the best RR like this, and score 1:20 or whatsoever. And of course understand for a fact that prices can actually move off without you as usual, right? So this is always the same thing. Okay, so now we have GCAT. Oh, Stephanie is here. So what else do we have? David, you have any pairs? We can't hear you, David. Okay. Aussie JPY, let's go and take a look. Wow, okay, that's so huge. Alright, so how are you planning to short this? Okay, H1 bearish order flow, alright. Okay, So this is pretty extended. Let's look at how we can catch LTF buys first. I mean high time frame areas first, because this is the break of structure, right? So we have a break here, and then we have demand areas at this level. So this sets the range where you can trade. Because now we are at the push phase, we do not know when this will end. So by shorting at lower time frames, of course, you're so-called going against the trend. So yes, you want to see a higher time frame shift first on the H4 at the very least. So you can see this is an inside bar. If prices wants to go higher, perhaps this is the first chance to get buys. So let's say we want to see this area fail. Okay, you want to see this H4 demand fail. Then perhaps you want to try to look for sells to go lower. Okay, and of course I want to see some sweep of liquidity, like I want to see perhaps this, a sweep, then a breakdown. Then I think this is a valid POI, because this sense we sweep liquidity, we broke lows. Alright, this is an inside bar, so you go down to the lower time frame, you can play with the 1 hour. Alright, it's cleaner like this. So this demand should create higher high. So if this demand fails to create higher high, then of course we expect this to be a flip zone, right? This fails to create higher high, breakdown. Then this becomes your flip for sells. And again, of course, we are super extended on the higher time frame. So generally speaking, we can expect some sells maybe here. Alright, I expect prices to move higher into this level. We can use the monthly wick as well over here. Okay, so both are valid. Alright, so let's go to the most famous pair, euro dollar. So what do we expect for euro dollar? Anyone in euro dollar trades? Wow. Okay. Yeah. Okay. So this is the supply. Okay. You took profit here. This is monthly time frame. Eh? Okay, let's go to the H4. Wow. Alright, so change of character here. Okay, so I think we talked about this on the student chat. So this is our bearish framework. So the entire break of market structure happens here. Okay, so all of these are basically internal structure, and we are looking for this bullish move currently. So yes, anywhere inside of this push phase is potential buys. Alright, so prices did react to this. So what is this? This is a flip zone for supplies, right? So we expect this to get ran. Okay, because this demand failed to create high, or failed to create high. Okay, and that is why this demand will fail. And how do we know whether this failed? We go down to the lower time frame and look for a change of character, and that signals to us that okay, this supply may not hold, right? So something like this. At this point of time, when we are pushing, we do not know whether this has failed to create high. Am I right? Until we see this. This is the first sign telling us that okay, demand may fail to create high, and prices are tapping into a supply, and this supply may hold because we see a 50 chop. Okay, so these are just signs to tell us, because we do not know whether it fails to push higher unless it breaks this level. So now, I'm expecting this to get ran, of course. So let's say if prices breaks down, you can catch a move like this for sells, or even higher if you want to, before going for buys, right? Because your entire framework for buys happened here. This is the low that broke high. So technically speaking, even at this demand, it's valid for buys if you see the confirmation that you're looking for. Make sense? Okay, so this is the framework for euro dollar, of course, on the higher time frame. So on the lower time frame, if you're planning to catch some moves, then you're kind of ranging over here, right? Because now we haven't break higher and we haven't break lower. So all of these are not the best prices to be part of, unless you're working with the 15M into the 1M framework. Like, for example, you're using the 15M boss like this, right? We broke lower, we have a supply. Okay, so this supply, you can confirm this supply using a 1M. So you go down to the 1M, and then you're looking for a shift in market structure like this, breakdown, and then you can perhaps get involved somewhere here to go lower, because you expect this to get ran, right? You expect lower prices to be met. Yep. So this is euro dollar. So just now, I've been out the entire day, so I only had one trade today, USD CHF. So I'm not too sure whether you guys also caught the same move. We are this is a counter trend. Okay, or I would say pretty tight because prices chopped here. Can you see? We took out lows, okay, and then we took out highs. So we have this. So people are looking to buy here, not wrong, and people are looking to sell here potentially because when prices makes its move higher, if this fails to break higher, then you can look for sells. Make sense? So now you have two trading range. One, you can use this as your sell trading range. One is you can use this as your buy trading range. But for me, if this breaks higher, then I think this is a better buy because this low broke H4 structure. Alright, you can use this as your change character. Alright, so how do we catch sells? Same framework, H4. This H4 is bearish. Alright, we have a POI here, can you see? H4 BOS. We have a 15M supply. Prices came back all the way, tap into this level. And then what we see over here, we have a change of character. So instead of going down to the 1M to try to catch this sort of a move, we waited for the 15M to shift first so that we can play with the 1M like what I did. Alright, so the truth is that when prices taps into this level, broke this level, I'm bearish where? Here. So this is where I think Richard and some of you caught sells, right? You guys caught sells and it went lower. So I failed to catch this move, it's fine. Prices start to deliver bearishly. Okay, so it broke here. Can you see this is the 15M bearish? So now my bearish framework become this level, right? And then I have two supply zones. I have one over here, I have one over here. So all of these are of course your buy to sell wicks. You can even use inside bar. So for traders who don't use buy to sell wicks, or rather, if these buy to sell wicks aren't apparent to you, then of course you'll be waiting for this inside bar, right? So let's say this inside bar don't get tapped into. It's fine because we are working with what we see. When prices starts to come back into this level, can you see by catching a lower time frame move here, our target should be within this range. Why? Because yes, this is the bearish framework. Prices started to deliver bullishly here. So unless this gets broken, we do not expect a move down. You know what I mean? And that's why if you catch the lower time frame sells here, you are likely to sell into this bullish framework. Okay, so I hope this makes sense to you. You are going down to the lower time frame to catch sells here. Alright, but you can see this is a bullish move. Okay, and then we have some sort of a demand here for sure. Okay, so unless this price breaks, we are not going to look for a lower down, move down towards all of this level. And that's why our 1M move was eventually cut right over here. I think we sold over here. This is the 15M supply. I went down to the 1M and I waited for a chop over here. Right, we sweep highs, we broke lower. So my sell was somewhere, I think here. So I sold here. Alright. So we broke lower again. So instead of placing my sell above this high, right, I placed above this level. So I hope you guys know why. Why did I place a stop loss above this high instead of this high? Alright, so if you do not know that, okay, maybe let me just ask, I don't know, who's here? Edison, maybe? Seth? David? Why did I place my stop loss here instead of here? So, you know, usually, okay, why didn't I place my stop loss here and instead place above this high? Yeah, exactly. Yes, that is correct. Right, so this is validated, this is not validated. So like what David said, because if I were to look for confirmations here, then I validated my supply. And that is why I can place my stop loss here. But in this case, I didn't do that, right? I just placed a sell limit order. Okay, so this was the protected high. This was validated by the change of character here. But this supply wasn't validated by anything. So how can I place my stop loss here if I was planning to? Just wait for this. Sweep, break, get involved in some sort of supply maybe here, right? And then sell here. Then now you can place your stop loss above this high because this is validated. This sweeps liquidity, broke structure, taps into supply. So there are three ticks here, right? We tap into supply, we sweep liquidity, we broke structure. That is why when I place my sell limit here, I can put my stop loss above here. Right, so I hope this makes sense to you. Yeah, and run it down towards this level before it actually reversed. So I took 80%, I was running the rest towards this low, didn't happen. Because we understand the fact that 15M we are bullish here. Right, this framework is bullish. And that is why we have a break towards the upside. We have some sort of a supply here. Prices reacts and continue to move higher. So of course we are still being able to sell, right? All of these areas are able to sell. So let's look for some live trade. Yeah. 1M, let's go. Yeah. Yes. Why would? Yeah. Oh, okay. Yeah. You mean this? Yeah. So look for, so you want to turn into a buyer over here. But not possible, right? Because what's your framework? Like, are we looking at the charts like this? We are not looking at the charts like this, right? You understand that we actually started from the high time frame, and that is why our bias is bearish from here. Remember? This was our bearish bias framework on the H4. So we are definitely going for sells no matter what. Remember? So even if in your 1M shows you it's bullish, it doesn't mean that it's going to go higher, because this framework here is bearish, and H4 has higher weightage, of course, right? So we use the high time frame first, we use the H4 bearish, then we go down to the 15M, then we use 15M bearish. Can you see? 15M bearish. So this will not be bullish until this gets broken, at least. Right? And that's why we are still trying to sell here, here, here. All of these red PYs here are still selling, because H4 is still bearish, 15M is still bearish. Make sense? Yeah. Yep. So Seth, it will be validated after a chop. Yes, that is correct. So basically you want to see prices starts to deliver bearishly, because remember the alignment portion, right? We have this, and then when prices starts to come back down over here, how do we know this demand is validated, right? We can't simply just buy like this, limit order. Because yes, of course it's a POI, we broke structure, technically speaking this demand should hold. But we don't trade like that, right? We use a high time frame as our bias, then we use a 15M chop. So now this 15M change of character or break of structure, whichever that you guys use, is the first sign that tells us demand wants to or could hold. And that's why we want to buy here. Right? This change validates this demand, and we are looking to run the highs. Make sense? Okay, and that is why over here when we place a sell limit, I didn't validate this structure. Right? I just placed a sell limit. And I expect this supply or this high to be protected. I don't expect this high over here to be protected, right? Because you do not know where is the highest high. Prices can continue to deliver bullishly. You know what I mean? Where are we? It was a USD CHF, right? So we do not know where's the high at this point of time. Okay, simply like this. At this point of time, we are selling into this huge bullish move. This could continue to go higher. When does it stop? Until it breaks lower. Then now, this is the high. You get what I mean? Alright? So this is how we actually use to validate the structures. Alright? And that's why this is what we meant by confirmation. It's not simply like a H4 bearish engulfing candle means it's your confirmation. Of course, that could be one of the entry criteria for retail traders, right? Using engulfing candles and whatnot to validate their structures. Okay? So this is USD CHF, still looking for sells, and if you want to look for a live trade, then it may happen already. So we sweep highs, but we did not take out lows, right? You want to take out lows. You want to take out this over here, unless you want to play with the internal structures over here. Otherwise, you realize that your only low is here on the 15M, right? High, low. Then all of these lows are actually respected. So there's no high, then chop, right? And that's why this is the area. So I want to see a bearish move down, right? And then sell at a POI. So the best case scenario, of course, is now if prices tag into something over here and go down. Why? Because you can see we just took out 15M high. So this is the sweep. We sweep the highs here. So if prices were to break down from here, then we have a sweep, we have a mitigation, then we have a break. Then I think this is a valid supply for us to get involved. Okay, so this is the USD CHF. Okay, let me allow Leon to share screen. How do we do it? Oh shit, I forgot to record. How do I allow Leon to share screen? Okay, yeah, I think you can. Okay, I think you can share. Yeah. Yeah. Yes. Yes. Yep. Okay. Mm. Yeah. Yeah. Yes. Yeah. Correct. Yeah. Correct. I think don't you can just, so I'll just annotate over here. So I think the first thing that you understand is over here, right? How are prices reacting to this supply zone? So for this to show you that it's actually want to reverse, right, to go lower, first of course the story need to be aligned. If this over here first taps into a higher time frame, like this, then you realize that yes, this demand should fail, even though it break of structure here. Why? Because this demand failed to create high. So that's the first thing you need to understand. Look left, understand that this shouldn't tap into a supply that is of higher time frame structure. Because this demand shouldn't hold. If I want to buy here, like this, I want to use this framework, this should break high. You know what I mean? Then I can look for this, because now my high time frame is valid. Over here, you are bearish framework. And that is why you are trading internal structure here. So this is the first reason, okay? You are trying to buy the bearish trade. Make sense? Alright. So you're gonna see here first. Go and see what did these prices tap into. Okay, that's the first thing. Second thing is when, okay, let's say you are really working on the bullish time frame, bullish framework. Then technically this shouldn't even hold. Okay, that's the second thing. Right? Probability wise, if you have high time frame in your structure over here, this shouldn't hold once this shift. Second, is this a change of character or is this a break of 15M swing? Okay, so in a change of character, right? Let's say we are usually denoted by minor breaks, minor break of structure, or MBOS or whatsoever, or maybe weak breaks. So the thing about weak breaks is it's not body break, right? That's the first thing. So how traders use weak breaks? There are two things. One, when weak breaks happen here, people who trade supply and demand flip not going to use this as a confirmation. That means this haven't break yet. Because for people who trade supply and demand, they understand that this is the wicks over here are just reaction points. To do what? so that when prices really break, they can use these wicks to form a demand to trade the flip. This is in the standpoint of supply and demand traders. Flip, I would say flip traders. Otherwise, you want to wait for prices to, if prices do this, right, your PY is here, it sweeps liquidity, it starts to break down, like this. Then this is a bearish framework, can you see? It sweeps liquidity, it taps into some supply, it starts to break down, and this is 15M bearish on the flow. What you want to see over here is realignment. You want to see another breakout like this. So now I ask you, this supply, traders who are trading here, they are selling here, right? Once you see this chop, are you confident with yourselves? Right? So this means you can buy here, right? So you want to wait for another alignment over here because sometimes prices get messy. You know, it's very easy when 15M break, straight away pull back, get involved, then you move higher, right? So my students always tell me, prices when the 15M range is super tight, when it change character over here, they get involved. It's easy to hit take profit, but when it starts to move off further away, and then they still have their demand here, they have their limit order here, prices just do this and break down, right? Because they fail to realize one thing. All of this over here, when it starts to come down, it mitigated something, it sweeps liquidity, it broke market structure, it starts to respect supply, you know what I mean? And this will continue to deliver bearishly until what? It breaks and it aligns this framework with this framework again. Make sense? At this point of time, your framework is aligned. Can you see? This box over here is aligned with this. But when it comes down, this is bearish already. So what you see is this being aligned again with this. Make sense? To go higher. Then what is all of these highs going to do? All will be used as liquidity points to tap into this level. Okay. Yeah. Correct. Yeah. 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 Yes. Yeah. Okay. All right. Okay. So, right, let me just share again. This, right. Okay, so am I on the screens? Okay, so, Seth, did I answer your question as well, Seth? Understand already, right, this part? Okay, cool. So, I think we have some questions. How to correctly identify trading range? Okay, so are there rules? So this is a question from, I'm not sure that I answered it when I go through the USD So at this point of time when on my H4, for example, my trading range is here. This is the bearish framework, for example. Okay, for some traders they even use this as their bearish framework because perhaps they're working on a low time frame like the 1 hour. So as a 1 hour trader, this is a very clean bearish framework. So this is their trading range on the 1 hour. Okay, and then for someone who is trading on the 15M, for example, then you realize that they have a different framework, right? This is their 15M framework here at this point of time. And then you can even go down deeper like this. And then when prices breaks out like this, then this is their trading range. You know what I mean? So trading range is really dependent on what kind of time frames or what are you actually trading? Where are you trading from? Where are you trading into? Okay, because you understand that for 15M trader, this could have been their way of entry. Right? It doesn't always need to go down to the 4 hours and then play up. Right? If you're fine with 15M being as your higher time frame, then you just need 15M break, then 1M confirmations or even the seconds confirmation instead of here. Then this defines your trading range. Like this. This is their trading range on the 15M. And that is why if you are a high time frame trader, you realize you can't catch anything here. This is nothing on the 4 hours. Alright, so everybody has their different trading range. And of course over here we are always using high time frame, which is the H4 or daily as our, I would say, high time frame. Right, so ultimately we are always trying to sell the H4 like this. We are always trying to sell H4. Right, then we have a huge trading range to trade. And then what we're gonna do is to catch the turning point here. Right, last time when you are trading retail, you're always trying to sell here at the top, right? But then now we just wait for prices to tell us to shift, and then just trade this, right? This is how you use the 15M and utilize it, right, using the H4 framework over here, and then of course traders use the 1M. Okay, so AN H1 short. Let's go to AN H1 short. Okay, so we broke lower. Okay, this is entire. Okay, fair enough. So let's say we have a supply here. So prices did broke towards the downside. And then understand the fact that when prices came up, it actually took out this high. So there are traders who are looking at this in this manner, you know what I mean? So surely you know where is your target for sales. Are you going to target this low? Right? This could have been it, right? So this is your liquidity point. And then of course you understand that with this, okay, there are traders who are trying to buy here and perhaps lower instead of here. And that's why if I sell here, I will not sell into the liquidity lows. I will just aim for demand or here. Okay, so you have to understand that. That's the first thing. So now you define your range. You understand that you are trying to sell this framework. So this change factor, right? So that's why you are going for sales, right? So what are you looking for? Yep. Yep. Okay. Yeah. Alright. So you're right, okay, because when prices break this level, this is the demand. This is the impulse rate, can you see? For prices to go higher potentially. So what is the safer option to trade if you're looking at a H1 confirmation? Correct. So this is the demand. You understand the fact that traders are looking to buy over here as their last. Correct. So these are the weak buyers. So weak hands, right, trying to buy here. Or if they have already positioned themselves to be a buyer here, they just want to wait for this to fail. Then this is a better buy. Okay. Yeah. Mm. Yes, that's right. It's really damn tight though. Like, prices doesn't have to tap into the 15 and realize prices can tap into the entire block and move off. So it's the same thing. When prices break this level, this is the range you have to play with. You expect a pullback immediately from here so that you can play into this level, right? Chances are unlikely, you know what I mean? So instead, you with this kind of a movement, you rather prices make its way higher, mitigate deeper, then break down. Then all of a sudden your low is here. Then your range becomes here. Make sense? Exactly. And you're going to see how prices breaks down. You can see highs, lows, highs. If prices starts to do this, you're not interested at all. You know what I mean? You're going to see intention behind the breakdown. Alright. So AN is fine, right? Okay, what's our next? EJ long, let's go and take a look. EJ long, H what? H4. Wow, okay, this is a super huge framework. So let's say, based on price, if you're going to be a buyer, you're going to buy like here. anywhere below this. That is based on price. Alright, so where are you trying to buy from? Yeah. Okay. Yeah, I think fair enough. Okay, so can you see this is a flip zone? So all of these wicks are basically reactions to this supply. Okay, supply here. All of these are reaction points before it breaks up. So the last impulse actually comes from here. So this can be your framework. So you are bullish here. So yes, this is a valid flip because this is literally the last sell to buy. Okay, so of course, if we have some sort of a demand here, it's actually valid as well. So let's go down to the lower time frame. Okay, let's say we have a demand that is left unmitigated at the lowest point, right? Because when prices taps in, the lowest it ever went is here before the breakout. So if we have some sort of demand here, it's still valid for buys. Alright, so it doesn't affect us because we are confirmation traders. So wherever give us the 15M change of character, we're gonna take the trade anyway. So yes, I think this is valid. If prices comes back here, 15M shift, we can take buys to go higher. Okay, whether or not it runs this high is another thing on its own, but of course, this should be a valid play, and you can already be a profitable trader trading this running to this high. Then let the rest run, of course, towards the highs. So down here, of course, if we are extended, right, we are super extended, and if we start to see here distributing, then this demand here fails to create high. Change factor here, we should see lower prices to be met. Yeah, so this EJ, I think, yeah, valid. We went through EU. Okay, so I think we have NU, alright. I think this is daily as well. So daily range. Can you see this here? Right, so if I use the entire framework, okay, we already broke this high. Alright, so I'm looking to buy. This is very extended. You can buy here as well. Okay, so we broke here. So this huge wick could be the reaction to this supply. It pulls back, then break out. So this could be a flip zone. This could be a flip zone as well. So both are valid, and it depends on how you are planning to take the trade. Alright, you can wait for 4 hours or 1 hour flip. I mean shift change character. So if prices of course again come back down here, change, we can take buys. Prices comes back down here, change, we can take buys here. So this will repeat the same, right? Beneath. But what's the difference? Right now we are in a H4 bullish here, can you see? This is an impulse of the H4. We are unlikely to see H4 distributing like this before tapping your POI. And that's why we can use the 15M change the character. But what happens when prices starts to break down here? Yes, you are still bullish. You understand you are still bullish in this framework because we broke this. Right? This is still the impulse. But as prices starts to break lower, change character here, we are delivering H4 bearish. And this is where you need to wait for the alignment. And then alignment on the 15M and then take the trade. Okay, so I hope this makes sense. Alignment and pro trend. Alright, see how prices taps into your supply or demand. See how prices are delivering to your S&D zones before you actually fire limit orders and whatnot. So this is the framework for New Zealand dollar. Any question for this? Okay, let's move on. So I have a question. How to backtest efficiently with multiple time frames? So for those traders who use soft or FX, you can use that. I don't use them. So let's say you are trying to play around with like H4, 15M, 1M, and then you realize that yes, you cannot play to 2017 because you don't have enough data to backtest the 1M, right? Or even the 15M. So if I remember correctly, 15M maybe can bring us to 2019 or 2020 or something like that. So just do live forward testing. Alright, forward testing it works as well, right? If you are seasoned enough, you understand the fact that you're not gonna force yourself to take trades because you know what you're looking for. Okay, so if you don't have enough data to backtest efficiently, then just work with whatever you have. So, for example, how do you backtest this? Maybe you have this over here, right? You have the very framework, and of course over here we can go down to the 1M because it's only recent. So you got 28 pairs to actually try this framework you are trying to do, which is a 3-step process, right? The H4, 15M, 1M. So if you want to do that, you can actually use forward testing. Go and understand how markets are moving based on hindsight. Alright, it helps, right? You can say that you are playing cheat, you are forcing yourself to see. If you can force yourself to see what you want to see, right, and make it happen, then of course set clear rules for yourself, right? I mean, don't deceive yourself, obviously. So we have this sweep, right? We have the break, and then you are trying to look for cells here. So inside here, you're probably not going to get a 15M shift. And then this is how you actually go use the higher time frame or use hindsight testing to your advantage instead of trying to squeeze in trades. And tell yourself, okay, I'm going to buy here and that. I think you need clear rules for yourself before you actually try to backtest and whatnot. And of course, understand the fact that time frames are fractal. So if you're trying to get involved in the 1M, you can get involved in the 15M and then try to play around with the time frames first. Alright, I would say just go back to the recent data and then use the 3-step like this, for example. Or you can even use this, all of these are examples. You can use USD just now, recent price action, and then use the 15M and 1M and see whether it makes sense because you have so many pairs. You can even go to the cryptocurrency and do the same thing, right? Okay. Anyone in any other trades? Or anyone in any live trades? Yeah. Okay. Yep. Which? You mean this one or this one? This one? Yeah, I think you annotate this here. Right, this one. Okay. So what I'm trying to do with this range? You mean this? Yeah. Yes. Correct. Yeah. Yeah. Yes, that is correct. Yeah, correct. So I assume you are saying once you see a break here, you want to at least sell higher here, then go lower, right? Yeah, fair. I think it's fair. Yeah, we need to see this demand go no matter what first. Correct. Yes, it's fine because we can just set prices play out, right? If it does this, then this demand may hold. Right, then now suddenly this demand, based on whatever we say, because we over here we conclude that yes, this demand failed to create higher high in terms of break swing structure here. Once it fails to do so, then we expect this demand to get ran. Right? But if it starts to switch here, it means that this supply or this supply or this supply fails to what? Create low. And should get ran. And that's why you can create a pullback to go higher. Right? Then this becomes liquidity. Yeah. Yeah. Yes. Correct. Yeah. So this bigger swing, you mean this or even bigger? Yeah. Okay. So you are saying this one and this. Okay. So I mean, if it depends on where's the target because right now my prices breaks this high, your liquidity point is still here in this framework. You know what I mean? Correct. Yeah, so if you are positioning yourself to be a buyer, then you are always going to be a buyer until it breaks this low, right? Correct. So you are just going to look for ways to get involved in buys. So if based on what you said in a group, right, you are not even supposed to look for sells, right? Because you're going to confuse yourself. Now am I long or am I short? Am I like short-term short? Unless you know exactly what you are doing. So let's say if this is your framework, then yeah, you're going to look for buys because you have a H4BOS here, you have a structure rate, you have demand zones here or maybe inside this wick, right? And this wick took out liquidity, taps into some demand here, and broke high. So this is valid if we have some sort of unmitigated demand. So let's go and take a look. So I'm not sure whether you use the 50%. Some traders do this and just assume that okay, this is actually valid PY. You know what I mean? Right. So for me, I use fresh unlock. Of course, I went down to low time frame and do for one, maybe 15. I'm not sure. Like this. So you can actually just use this. The entire sum to buy, and then suddenly this becomes a valid PY because this over here sweeps liquidity, mitigates. Not sure whether it mitigates any demand. Higher time frame here. Alright, sweeps liquidity, break market structure here, and now suddenly this rate PY becomes valid. Okay, so yes, now if this demand fails to create high, should get red. But you're still bullish, you understand what I mean? This should get red, just to tap into another PY to shift bullish. Yeah. Yeah. Correct. Yeah. So just that your range is pretty tight if you are trying to sell to buy. I think it's fine if you know when to take profit, you know what to expect. Otherwise, it's always easy to stick with your high time frame buyers. It's so easy to trade this. You can see all of this supply here, right? Let's say we expect prices to break, then tag in, then taps into this PY. Then all you need to do is to wait for this supply to fail, and then trade the extreme or trade this demand, and then you expect prices to move higher. Because you were already expecting buys anyway from here. The moment it chokes here, it starts to deliver higher. You expected this to run highs already. And now your 15M tells you, yes, we are going to run highs. You know what I mean? Yeah. And this is where, okay, not sure whether traders actually understand this part. Because remember you were bullish. And then this is where maybe, okay, for Neon, right? Let's say over here you're waiting for 15M to chop because we have this demand here, for example. And then yes, it did broke higher. And then where's your PY? Here, right? So this is where you guys place buy limit, like this. Right? Yes, exactly. So this is the time we can address it. So can you see when prices taps into this level, what did you do over here? It gave you a very framework. It taps into a supply, it mitigates, it sweeps, it broke lower. Then now what? Mitigation, break lower. This is all bearish framework. You were initially bullish, you are right here. Okay, so you were expecting demand ever since prices breaks this high, and fails to do so. Continue to deliver bullishly, taps into a POI, sweeps liquidity, breaks structure, delivers lower, right? And now you are placing a buy limit here. This is risky, okay, because you have a bearish framework. You can buy here, and then you expect like this. You can, but no point. Right, this is super. You just wait for this. Like this. This is 100 times better than buying limit here. Makes sense? Because you align. This is bearish. Wait for bullish move. Taps in. Move higher. Makes sense? Yeah. Yes. Yeah, that is correct. So sometimes, of course, you make a run higher, right? Because you are playing the high time frame. Because ultimately, high time frame is still in your favor, and that's why sometimes this works. But otherwise, the easiest way is of course this, then extreme. So if you're always playing the extreme, then you expect these kind of things to happen. But if you're playing with someone who trades supply and demand flip, right, then this is where you can get involved in higher POIs. Like for example, when prices tag into this, let's say move into this level, it reacts, then it breaks. Straight away, everybody know that we have two POI to play with. We have the first one here, and you have the extreme like here. So prices can come here, 1M shift, and run higher, and never come back. And then you're going to face with the same scenario over here, you know what I mean? So instead of playing the extremes every single time, of course that is the best price you can ever get, but sometimes it doesn't come back. Right, go and understand how 15M break structure, how 15M change character. Then you will understand that, okay, you know, prices doesn't have to necessarily come back to the extreme to mitigate, to go higher. You can just play the flip to go higher, you know what I mean? And then run the highs. Okay? Yeah. We do not need to necessarily wait for 1M. It depends on your framework. So let's say for me, over here, we have this. Alright, so okay, this blue color. So if prices tags in, pull back, break this level, like this. Then of course we all know that this is the extreme, this is the POI. So if my flip is very high, like this, there are two ways I can do. I can place a buy limit off the 15M, place a stop loss here, understanding that this is risky. I can cover the entire demand, you know what I mean? Right? But you understand that this 15 pips on euro dollar is pretty huge. And this is where you want to use another framework. You want to go down to the 1M, right? Like what I said, and play this to validate your demand. And the reason why you're doing so is because you want to buy this and stop loss here on the 15 pip for euro dollar. You want to play with a tighter stop. And that is why you are waiting for this shift to happen to buy here, to go higher. Okay, so if this is the extreme, let's say like this, let's say this becomes an inside bar or something like that, and then it breaks higher, reacts here, then this is a very nice extreme. Or if this demand flip, this reaction is so huge, for example, this reaction of the supply, it does this, then break out, then your entry is like here, then this is fine, right? Because now your stop loss is nearer to the extreme, and then maybe you can have like, you know, a 10 pip stop, then it's fine. Make sense? Yes, correct, trade management part. So we understand the fact that this is the low that created a high. So you are technically not dead until, correct. And one of the things about this is, when you have this, for example, flip right, and then you have an extreme here. When prices tag in, what do you do? So what's the difference between when prices tag inside here and tags inside here? It took out this low. Yeah, it took out this low. This is where traders immediately assume this as inducement. Okay, so theoretically speaking, you want to see a chalk back. Then take buys. Because this is now bearish. Okay, but not a lot of traders do that, and some don't even bother. They just place a buy limit here, and it's fine. They are willing to take the probability. So this is really trade management. Okay. Yeah. Correct. Yeah. Okay. Yeah. So this is risky. Okay, so now, can you see this is a demand, right? It's valid. So now if prices tags in here, pulls back this sell, not the best. Because you do not ever know that this demand can hold, right? So you want to go down to the low time frame to look for a shift, right? to validate that maybe this demand really failed to create high, or this demand failed to create high. Yeah. Yes. Correct. But what you want to do is you want to validate this area. Why? Because when it broke this low, can you see the framework that you're breaking? Is this. So when you break a higher time frame low, what do you expect? Yeah, you will expect a higher time frame retracement. Right? Not necessarily. Right? Because you can see sometimes prices break here and then starts to mitigate lower and lower, then pull back. Then this is when you get a huge retracement. Okay, so if you're willing to take the loss here by means of because it's very straightforward, right? Let's say you do not know now. Oh, this is very messy. So let's say this is the demand. Ultimately, you're playing. Okay, and then prices broke down here. Okay, and then you're willing to take the first bet, basically here, to take sell like this. You're only gonna get wrong once. You know what I mean? So how do you know whether the high time frame retracement is gonna come? If it blasts through like this, then you know, okay, we are going to be bullish until the premium level. Like over here. So you're going to get wrong once. So you have to ask yourself whether you're okay with that. Otherwise, you position yourself to be a seller of straight away. Yeah. Yes, of course. Right? You're selling them low, you're selling at the extended late. Yeah. Cool. Because you're looking at one pair $1 and you are trading like almost just a few time frames, right? Yeah. And that's the thing. Because you're trying to force yourself to see what you want to see, because you want to participate in the market. Right? And the truth is, yes, you don't really get a lot of H4BOS in a single day. And that's why people play UJ, GU, and all those stuff. Okay. Yeah, so, wait. Leon have last, right? Oh, Leon last already. Yeah. This Yep. Yep. Bullish trade. Yeah. Okay. It depends on the framework you're trying to do. Let's say because prices really change factor here. Alright, it takes into the supply. So if it comes back down to this demand is valid because this demand broke this level, right? So if you were to look for a low time frame shift like this, right, this tells you that this supply here, where prices tags into this, failed to push lower, then should get ran. You know what I mean? That's one of the ways if you want to play the 1M. If you are solely a 15M trader, then what you need to do is to wait for what? This supply to fail, like this. Then what? Demand. Yeah, that's correct. Yeah. Yes. Yep. Yeah. Okay. Alright. So another scenario is when prices tags in here, it reacts to this demand, it push up, it breaks down. Then this becomes your flip. Okay, so now you have an extreme, you have an extreme PY here, you have a flip PY here. Who is gonna win? You do not know. So you do the same thing. For this demand to win, or tell you that prices wants to run this high, is when it shifts, pull back. Then now you get involved. You are definitely gonna run this high, because this failed to break lower. How do you know that? Because it is your chop here. Okay. Yeah. Correct. Mm. Yeah. You mean this, right? Yeah. It's still a chop, because the prices tag side here, can you see? You take out low, like this currently. It chop down, chop up. So now this is your alignment already. You are still trading the 15M. So whatever you see over here is the same as the whatever you see over here. Right, because you still took out low, took out high, took out low, took out high, took out low, took out high. Demand. This is still a 15M framework. Yeah, not yet. Mm, yeah, correct, correct. Yeah, you want to see intention, you want to see this, you want to see this, you don't want to see this. Of course. Yeah, we don't know. You can see the candle is forming. Right? One M. One is like equal also. So you have to take all of these are equals. What? Oh. Yeah. If you're one M trader, you can go for it. Otherwise, you have to wait for this. Okay, the 15M play. Yep. Easier that way, for sure. You will take lesser stops. Yeah. Okay. Wait, why do I have forextradingstrategies.com? What the hell? Oh, here, right? Oh, okay. This, okay. So let's say use forex.com. Yep. Yeah. All valid. This. Yeah, this and this inside bar. So how? Okay. So now the question is, how are you gonna manage your trade? Are you gonna do this? Are you gonna do this? Yeah. Correct, like this. Mm. Okay, maybe we can play the lower time frame so let's see. So this is the entire supply, right? So wait out, then sell to buy weeks, right? So maybe let's go down to the lower time frame and take a look like what's going on. Okay, so actually we do have a lot of things. We have nothing on the lower time frame. Yeah, so not very clean. Otherwise, the 1M over here, of course, I think both are valid either way. So it depends on your game plan. If you are trying to fight for the best price, then of course just screw this and just buy this and stop loss here. But if you are trading the 1M framework, you understand that both are valid. And when prices comes back down, what do you think is gonna happen? There's probably gonna be a selling move, right? Right? So instead of placing a limit order here, you can wait for prices to come back down, shift again, and then buy here. Then you can put your stop loss here, or this, then you can put your stop loss here. But if you are fine, because this is so hot the extreme, if you are fine with that, buy limit, stop loss, fine as well. Because prices are not going to deliver to you like this every single time. It may just break down, break out, mark up, and then you miss. Right, so this is something you need to understand. Okay, so sometimes pairs don't move like that, right? Taps and goes, taps and goes. It happens, right? Like Euro Pound this kind, or I think Joel mentioned some Aussie pairs, right? They actually do that. So you need to understand which one is comfortable for you. So if you're not going to specifically go down to the pairs and really go and crack the code, which actually delivers, gives you a very nice shift and stuff like that, then just need to play with the probability and understand the fact that when prices taps into a POI, it doesn't necessarily need to give you a beautiful shift for you to come back to take entries to go higher. And sometimes you are forced to buy higher. Like let's say it shift here, right? Everybody in the world is waiting for this demand. Right, so but sometimes you understand that this is a supply as well. And then the prices may tap in, react, then break. And then people are really trying to get involved here. And then come back here to run higher already. You know what I mean? So that doesn't mean you need to come here. Yeah, but of course not strong lah, right? You want to see a strong sell, a strong reaction, then a breakout. Then it's better. Yeah. So let's say if this happens, this plays out as per intended, right? Supply, reacts, break, you get involved here, runs higher, and then it starts to, for those who are waiting over here, it starts to run like this. Then how? Your buy limit is not good already. Yes, exactly, you have to wait for this. Right? And then if this taps, sweeps, break, your buy over here, I'm going to target into this supply. Right? And then see what it does over here. If it reacts, break out, then you have this flip, you have this demand that is left unmitigated. Then do what? Same thing, wait for prices coming down, shift, get it off here. This failed to create lower low, breaks higher. If it goes lower, it chokes. Wait for, choke back up. Yeah, so it's a very systematic approach. Just keep looking for a realignment. Okay, any questions for euro dollar? H1 ETH USD. H1. Wow. This is good news, man. Okay, yeah, you were saying? Yep. Yep. All of these are internal structures, substructure. You want to see this, correct? So it depends on the kind of trader you are. So some traders actually just wait for, okay, so now everybody in the world knows that now we sweep liquidity here. right? We sweep, we are waiting for a break. So chop then you can get involved here to buy. So sometimes this is super far, like it's higher. This is already considered very far, right? So what traders like to do is wait for a push up, comes back down, sweep, mitigate, breakout. Then they trade the substructure like this to buy up, until this gets taken out. Then this becomes what? Either your flip or whatever, right? Comes back here, then buy up, that kind of thing. So you can really get involved in the substructure if it undergoes sweep, mitigation, break, right? Then sweeps, mitigation, break. Right, but if you are sticking to one framework and only one framework, then you are just going to wait for this to be broken. Then this is the real chop, right? Or in this case, 15M BOS, because the swings is like this. So break, pull back, get it off. Yeah. So we know, because what we understand now is H4, right? Tags into the entire demand, and then of course you have a very nice one H1 over here, right? So how do we expect a H1 move? If it fails to clear a high, then this is where it's going to run down to run this low, because this low failed to create high, right? And this gives a cause for prices to go lower, to seek deeper prices and mitigation, to then go higher. Make sense? Okay. Is it all the cryptos? Okay, cool. Any pairs? Did we go through all the higher time frame pairs? UJ15M. Okay. Okay, so now if I will take swing points, right? It's gonna be this. So this is my swing point. This is the break. Demand. Right, so haven't tagged in at maybe high time frame, not too sure. 1 hour. Yeah, so 1 hour pin bar. So I think we can use this as a H1 BOS towards the upside. We have a demand zone here, valid, and it depends on your confirmation. So traders who are using limit order, they will 50% this fire limit order. If you are a confirmation trader, you want to wait for a shift. And in this case, we don't have any shift yet, because the chop happens here. So with this, over here, this movement, right? Let's say we see this, then we see a breakdown, then we see a breakout. All of a sudden, you don't have to wait for this. You wait for this, alright? Because right now our bearish leg for the 15M is here. So unless we see another bearish leg happens, then it takes out low like this. Then now we have a sweep, and then we have a chop here. Then we can wait for this to happen, and then buy here. Otherwise, right now, honestly speaking, I'll wait for this to clear. Alright, and the good thing about this is we have so many reaction points, like, for example, this week. Yeah, maybe this week. So how will I take a buy? If prices tags into this supply, reacts, breakout, then this becomes my flip for entry. Okay. Otherwise, I want to see a rundown, then a breakout, and then get involved somewhere here. So this is valid for UJ as well. Yeah, otherwise, okay, so now how to build a story around this? Because we have a 15M bearish leg here, right? And then can you see this 15M? So let's say we have to refine into this. So now don't you think that this low could be an inducement to go higher? Right? So you are building a story because this is 15M bearish. So the prices, and we can look for sells here to run to this level, to then break higher, to follow this framework at the end of the day. Alright. Okay, what's next? You guys got any pairs? We run through GU yet? Okay, GU. Yeah, I didn't go through GU. Okay, so now we have this sell to buy wick. right? We tag in, and then we have this demand here. So based on the framework, of course, this is our bullish breakout here. Okay, so we're down to lower time frame, 15 AM. Oh wow. Okay, so it actually chopped here. So it depends on what kind of trader you are. If you want to wait for a body break. Alright. Otherwise, this is a valid chop, and then like, I don't know, this is a 15 AM demand for limit order. You should have got involved already if you are to play with this. Otherwise, you have to go down to lower time frame and see how prices break structure. So you play around the time frames. Look for what? Look for confluence. Let's see. Okay, so now I think we played 2-3 AM. So this, can you see this? It broke a low. So this becomes a valid supply, like this. Okay, so this is a valid supply. You can use the entire leg as well. This is a valid supply because it broke the low. So prices technically broke down, tag in, reacts, and break out. Right? So this is the 15 AM framework. Then for those limit order traders who are using weak breaks, 15 AM chop, this is the perfect application. Okay, but for those who are using body breaks, then what you have to see is a breakout from here. Then what is this? This entire move over here is your sell to buy reaction, right? This is a supply, understand? Prices break down, tags in, reacts, then now break out body breaks. Then this becomes your flip to get involved. So there's two different ways to get entry. Otherwise, another thing, 15 AM short, then remember we went down to decode this area. Here, right? We have a refined one over here. Then what you want to do? You want to wait for 1 AM to switch. Right? So for me, I want to see like a move up, a breakdown, a break up, a tag in. Then this gives me a 1 AM short. Like this, like this. Then this is where I get involved here. Okay, so there are multiple ways to get involved. And the other is of course, like what we mentioned just now, a breakout on the 15 AM, a pullback, get involved here. Valid as well. Okay. So what we're going to see over here, we are going to see the same thing beneath. We're going to see the same thing happening over here. H4 framework. Yeah, correct. So I'm going to see a 15 AM chop here. Right, and then I will take buys. Same thing. This entire framework is bearish. Okay? And what we are trying to do over here is we are trying to trade the counter trend into this, into this. So you are temporarily buying into a sell level. So if you are strictly using the 50%, then you can actually buy into this level. Can you see this? Alright, so all of these are really areas to buy, to sell from, of course. And then if here fails to break, then this of course liquidity, stuff like this. So we do not know which is the best zone, but we know for a fact that if prices shifts, right, on the H4, because this framework is so huge, you want to see at least a H4 shift before you actually use the lower time frame to get involved in the market. So you want to see a H4 shift here, and then this is where you use the 15 AM to go lower. Same thing over here, right? And then same thing over here. So some of the traders actually use the extreme, like the H4 extreme. Okay, this is not even H4, this is like daily extreme. Right? If this is the last point, then sometimes they don't even go to the 4 hours to do for shift. They just use a lower time frame like 15 AM and try to get involved because they understand that this is the best possible price to sell. If prices break this level, we are bullish already. Okay? So any questions for you? This one. Yeah. So where's the swing? Here, here, here. So the point of the breakdown here. Measure to the top here. So my premium is here. Yeah. Correct. But this is where it gets really funny because you see when it breaks out the high, right, then this is your 50%. Okay, so I mean of course it taps into it. Then you can measure here also, 50% is here. Yeah. Yes. Okay, so if you guys don't like this kind of small movements, right, then don't bother. Otherwise, if you understand what you're looking for, then go for it. Okay, go and find out how 15M always shop when this happens. Right, when 15M shops, right, it breaks this low, this becomes your supply. So technically speaking, this inside here on the 15M, you may not have any reaction because can you see it like this? When it breaks down, the next candle on the 15M is just one candle that breaks out. But you do not know what happens on the low time frame. Maybe inside on the 1 minute, there's like a reaction, then breakout. But on the 15M, of course, it's just going to be represented by one candle. But on the 1M, it's multiple candles. You know what I mean? And this is the reaction that you actually need to validate, your demand or whatsoever for confluence. Okay. Questions? Not sure whether is David there. David is. Do you take this? Do you take this 15M? I don't know. It's something that you will take. Yeah. Yeah, that's only like I don't know, 7 minutes ago. Okay. So I think this tag alone is like worth, I don't know, 1:1.5. So it depends on how you guys do it lah. Some of you all like to really run all the way to the high. Right? Some of you guys just gonna partials at 1:2 or whatsoever. Completely up to you. You guys decide yourself. Alright. Any other major pairs that I missed? Or any questions? Everything clear, right? Okay. M15 verify. Here's the. Wow. What's your framework? On the 15. Or here. Okay. So yeah, I understand. Okay. So what's the difference if it's like this? Because now it mitigated already. Like immediately when this breaks tags in, break already. So technically this demand, for me, not valid. Alright, because this when it tags, it should create a high, you know what I mean? Okay. So we went deeper inside here to look for a low time frame. Okay, so let me just go to the lower time frame. Page 4. What time frame do you refine it to? Any idea? Okay, so I mean, because if we are to use demand areas as, let's say if we do not have any unmitigated one, right? Then we're going to use demand areas like support and resistance because you're going to allow it to, get mitigated a few times. Because support, the more times it taps in, the stronger it becomes, kind of a thing. Right? But for supply and demand, if you are to do it that way, then of course it's going to be different. So let's say we have a 10 minutes PY here. Okay. So once it taps in, you were using a 15M or what? like here. This was yesterday or okay. Okay, cool. So now I want to see this getting taken out for sure. Okay, so sell sweep here. Then what? Chop. Okay. Okay, fair enough. Chop. Then what? You involve here? Hmm. Ah. Okay, so when you want to see this getting taken out first, of course, right? Because this failed to push higher. So when it starts to distribute above, then you want to see this demand fail. Or this low fail. Once this low fail, then you can redefine low, high, low. Then this is the change character. Then this is where you have a demand somewhere here, maybe 30M, like this, to get involved. So for me, I do fire. You can go down to the 1M and see whether you have an opportunity. This is 10 AM. Right? Oh, shit. So this is your entire demand of 30 AM. So it depends on how you want to get involved on the low time frames. You have to make sure that you have confluence in your areas, ultimately. Then take the trade. Okay. Then run the highs. So do you get involved anywhere inside here? Hmm. Okay. Yeah. So if you're following the structures, right, the swings, this is the bullish framework. And then this is the next bullish framework. Bullish framework. So now it chops down. Okay. Yeah. Right. So if you're looking to get involved again, if you see this, then maybe you can get involved again. Okay, otherwise you just want to see high being taken out already because this entire movement over here not very clean. Mm. Yeah. Mm. Yeah. Okay. Okay. When you buy over here, you understand you are playing the change of character because the swing point, if you were to follow, is here. This is the high that created the low. So technically speaking, you are not supposed to look for anything higher than this or this until it breaks. Right? So when you here, maybe here. Hmm. Yeah. Yeah. Okay, fair enough. Alright. Yeah, okay, cool. So these you can. Yeah, no problem. Alright, any last few pairs? You can is so messy to trade. Yeah, that is true. For now, at least for now. Cause you can see one look, this is not very nice. Then yes. Yeah, UJ is super extended, USD SGD, ECAT, EA. Yeah, I think it's just basically the yen pairs are solid interest, guys. Okay, so AU daily framework like this. Right, then we sweep here, we took out this high. Over here. Okay, so we need to see confirmations happening here. Alright, depends on the time frame. So this is a very huge structure. Right, I want to see a low time frame shift. So it depends on what happens here because this is super huge zone. Anything can happen inside this zone. Alright, so we form a low here. So this is a low. Okay, yeah, we have to see the next candle, right? So let's say the candle closes here, the next candle push up, then this becomes a low because we have this, then this, right? So for now, maybe the only low that we see is here. Alright, so we're gonna see H4 start to create movements here, so that we can create a low here. And that's why when it starts to break down, we can take sells like this, right? Understanding that our entire framework is this movement over here. So yes, we are bullish. Can you see we sweep liquidity, we broke the high, right? So we can look for buys here because it broke this level. So now if prices turns back from now, we are in a bullish move. Right, this is our bullish move, immediate bullish move. Yeah. Yep. Correct. Yep. Daily boss. Yeah. At this sort of time, yes, see replay button. Here. So now this is your bearish framework, correct? At this sort of time, it is still delivering bullishly. This is the lowest point it went up. If this happens, yes, shave, take sells. Make sense? But can you see what prices did? It makes it move higher, it sweeps liquidity, it broke structure downside. So now this creates a bullish framework immediately over here. You know what I mean? So can you still take sells here? You can. But you understand that this is now bullish. So if you want to sell on the higher time frame chop, you want to sell into this. Because this is a bullish framework to go higher. Make sense? So if you want to run it down into this level, then you want to see this fail. Correct. Then you trade this or trade extreme. This is going to take a long time because this is a daily time frame. Right? So this is exactly the same as what we mentioned again just now, because this went through a bullish move. Right? Six liquidity, break swing structure, move higher. So suddenly your bearish framework is not bearish anymore. Yes, because your breakdown over here that pulls back already met its target here. Yep. Okay, so yes, we still have a daily supply here. If we were to see a follow through, this will not hold, then how can we catch buys or sells? So honestly speaking, on the daily time frame, this is the one that's going to align for you. Alright, this swing structure, this move. Because it broke higher now. Alright, then we have a demand. So honestly speaking, if you want to see a move down, and then suddenly this becomes your liquidity area, is that you want to see this align, then pull back, then trade down. Alright, this is the easiest to trade. Otherwise, you understand that this is a bullish framework, you go down to the low time frame, maybe 4 hours, you wait for a shift happening here. When it breaks down, all of these demands are basically your targets. We have like, this over here. So this is a supply, this is a demand. Okay, so your range is really tight for sells. If we do this, of course you can sell, expect a reaction down here, and all of this can be a sell, right? But you need to understand where you are in the market, right? This is a demand on the daily. So all of this is basically your bearish move into this demand. And then if it undergoes an accumulation stage, then of course this supply, this high, failed to create low, this undergo an accumulation, broke, demand, test, break structure, this is going to get red for sure. But if this tags in, reacts, break down, then this is a supply, right? Then you're going to get involved here. And you're going to run all of this here, 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 here. Then you're going to see a new structure form lower. Then you're just going to repeat the same process. This becomes your entire bearish framework. And if you see a movement like this, it's going to take for a while into this area. Then sell. This is clean. But what if we see whatever that happens here again? Right? We see a pullback, we see a breakdown, then we see a move up. This is not bearish framework. Okay, because we sweep, broke, demand. If you break this level like this is a valid buy for sure. Okay, and this supply shouldn't hold. Alright? that's nice. So this is like I don't know. Yeah. So if you caught this, good for you. Otherwise, too bad. 1:5. Okay. Any other questions? Okay. All good, ah. Alright, anything let me know if you got any questions or if I didn't manage to address some of your problems or whatever you are facing for the week, let me know. Please just straight away, get a call with me or you can just direct message us. Otherwise, I see you for the next refresher course or webinar or whatsoever, okay? Alright, bye guys. Bye.